Namaskar. Today we will be beginning with our next topic in our course on sales and distribution management, and this topic is sales quota, which we shall be covering in two lectures, which is lecture 32 and lecture 33. Now, in the previous two lectures, which was lecture 30 and 31, we have spoken about evaluation of sales force, and therein we saw that companies set performance targets for their sales personnel at the various territories, in the various branches, in the various zones, and accordingly the salesperson's performance is assessed in terms of whether he meets those targets or those standards or not. At the micro level, it helps assess the performance of the salesperson. At the branch level, it would help assess the performance of the sales personnel posted or placed in the branch. Similarly, at the zonal level, it would mean assessing the performance of the sales personnel in the different branches making up that zone, and so forth, to reach a macro level where it would be assessing the performance of sales force over in a zone or in a country, at the headquarter, assessment to be made at the macro level, at the headquarter level, to see whether the different targets with respect to sales volume is being achieved or not, and whether profitable sales are occurring or not. And this would help assess whether the performance at the national level, or at the zonal level, or at the regional level, or at the branch level, or down at the micro level at the sales personnel level is something which is positive or something which is negative. In case it is negative, in case it does not meet in case the performance does not meet the standards or meet the targets which has been set up, in those case corrective action is required. So, the entire process begins with one, establishing standards or performance standards, second, measuring performance against standards. Now, measuring performance here would mean of the sales personnel at the branch and of all the sales personnel at the branch level, and then similarly, as I said, at the regional or the zonal level, and then at the national level, to give a macro picture of the overall performance of the sales function in the organization. Once the actual performance is measured, it is then compared to the desired or the performance standard which was expected to be attained, and the gaps are identified between the actual and the desired, and corrective action plans are suggested so that such deviations can be controlled. So, the entire evaluation process starts with setting up of performance standards or desired performance standards, measuring performance against standards or measuring actual performance against standards, and comparing the actual vis-a-vis the desired, and then identifying deviations to look for factors which can be controlled or factors which are which cannot be controlled, so as to lead to identification of controllable and non-controllable variations. And then the sales managers or the marketing managers must suggest corrective action plans or strategies and tactics to be, so that future deviations between the actual and the desired can be controlled, and the actual is something which is always more than the desired. So, what we are talking of is a performance standard or a performance measure, and this brings us to our discussion on this topic, which is sales quota. Now, what is a quota? Coming to this, we will, in this particular topic or lecture, we shall be studying what are sales quotas, what are the meanings of sales quotas, what is the rationale behind sales quota, the objectives of setting sales quotas, the types of sales quotas, the method for setting sales quotas, how do you administer the quota system, what are the guidelines for setting and administering a good quota system. So, this is what we shall be discussing in this particular lecture. Now, we will be talking about the meaning, the rationale, the objectives and the types of sales quotas in this particular lecture, and then we shall be continuing with our discussion in the subsequent lecture. Now, let us first talk about the meaning of a sales quota. Now, simply put forth, a sales quota is a sales goal or it is a sales target that must be achieved by a salesperson within a stipulated time period. Now, it would be a salesperson if we are talking about the salesperson at the micro level. It could be the target set for a branch. It could be which would mean target set for all the sales personnel placed in the branch or posted in the branch, and similarly, as I just said, it could move further at standard set for the region or for the zone or for the national level. Now, a quota is a quantitative objective which is assigned to a marketing or a sales unit with the objective that a particular level of sales volume can be attained, a desired level of sales volume can be attained within a time frame, and it is assigned to a marketing unit or to a sales unit. And as I said, it could be a division or a zone or a region or a branch. It could be an individual salesperson at the deep down at the micro level. It could also be a channel partner, a dealer or a distributor. So, it is a sales goal or a target which is which must be achieved within a stipulated time period by any of the marketing or sales units. Now, once assigned, the units then work together towards achieving the expected performance objectives. Sometimes in several cases the performance is something which is individual based, where individual salespersons must work on their own to achieve the sales goal or the sales target. In certain cases it is more of a team approach that must be adopted, and the various sales units must work together for achieving the expected performance objectives. Now, quotas here may be set for the sales figure or for the sales volume. It can be set for the expense or the profits. We have spoken earlier about gross profits and net profits. So, the quotas here could be set for ensuring that a company is able to earn secure and good or healthy net profits, and for this is very essential that not only is sales volume emphasized, but even selling expenses are controlled. So, sales quotas can be sales volume quotas are one. The other is with respect to generating healthy profits for the organization, and so quotas may also be set for the expense which a salesperson must incur, so that it is ensured that what he earns or the kind of revenue he generates or the sales he earns is something which contributes to healthy net profits for the organization. So, it is important that quotas are laid out for expense as well, so as to ensure healthy net profits for the organizations. Quotas may be also set for selling and non-selling activities, which we shall see subsequently. Now, going back as a recap, if you recall, we spoke about the sales having a big role in determining the profits of the organization, the gross profits of the organization, and we said that sales volume or the sales earned minus the cost of goods sold gives the gross profit, and the gross profit minus selling expenses gives you the net profit. So, here the salesperson plays a very crucial role in determining the net profits of the organization through the kind of sales volume he can generate and through the selling expenses that he incurs, both of which will have an impact on the net profit that a salesperson can contribute for the organization. So, quotas are thus set for sales volume. Quotas are also set for the selling expenses, so that a healthy net profits can be assured in the long run, and quotas are also set for selling as well as non-selling activities. Now, why should quotas be set for selling and non-selling activities is because selling activities are always associated with some kind of incentive and reward, which non-selling activities are not. So, in those cases it is a natural tendency on the part of the salespersons to avoid non-selling activities, which could be very crucial for the organization, and these could include calling upon clients and customers post sales, arranging for local advertising and promotion with dealers, ensuring that records are generated by dealers from time to time, and such reports are sent to the branch and to the zone and to the corporate. Also, making calls on dealers and distributors to seek to feedback from them with or information about market trends or about customer feedback, etc. So these are certain things which salesperson would avoid because they do not relate directly to commissions and incentives, but these are activities which have to be undertaken and performed, whether it is making calls to customers or making calls to dealers and distributors. And so because these activities are important, it is essential that quotas are set for them as well. Other non-selling activities could include sending reports to the head office or to the corporate office. We have spoken about field sales reports earlier. Arranging for corporate social responsibility activities in the region or in the branch, and arranging for participation in local fairs and trade fairs, etc., are important non-selling activities which the salesperson must undertake, and so there is a quota set for these activities as well. Now, the sales quota for the various marketing and sales units are formulated keeping in mind the annual marketing plan, and the stronger the relationship or the integration between the sales forecast, the sales budget and the sales targets, the better the control mechanism. Now, the sales budget is based on the sales forecast, and it delineates the company's sales volume and the selling expenses. This is then broken into sales quotas for the various control units and the sales territories, and the quota is divided among salespersons. So, if you see what we get is that there is a strong relationship between the sales forecast, the sales budget and the sales target. The sales budget is actually going to talk about the sales volume and the selling expense, and the sales budget is based on the sales forecast, and then this the sales volume and selling expense which are the two components of the sales budget will be broken into sales quotas for the various control units and the territories, and the quota is then going to be divided amongst the sales personnel. So, further these quotas may be broken into half yearly quotas or quarterly quotas or monthly quotas or weekly quotas and so forth, and they are extremely helpful in managing and controlling sales operations of an organization. They help in a big way to plan activities, to control sales operations. However, the effectiveness of determining targets majorly depends upon the kind of market information that has been received, because if you see we just spoke about the sales forecast having providing inputs for the sales budget, and unless accurate information is achieved about the market, about the demand, about the competitors, etc., targets may not be suitably or appropriately set, and so the effectiveness of determining targets majorly depends on the quality of market information that is received. Now, what is the rationale behind sales quotas? Now, a sales quota acts as a planning tool, it acts as a control mechanism. We have discussed earlier how planning and control are two Siamese twins, they cannot be separated from each other, and the sales quota tells us how much to be achieved, in what time period, in what sales territory, by what marketing or sales unit. So, in this way it clearly tells what is to be sold, where and by whom and in what time period. So, it acts as a planning tool, and against this planning tool or against these targets formulated for the control units, measurements can be made and a control mechanism exercised. So, that is how we say that sales quota acts as a planning tool and it acts as a control mechanism. It gives and it clearly specifies what is to be sold by whom, in what time period, in what territory, and so proper controls can be exercised. Now, the sales quota also has motivational implications. It has implications with respect to performance appraisal and evaluation, which we just spoke of when we started the lecture. It has implications for career development, whether it is with respect to internal mobility and transfers or promotions. It also has implications for training needs identification and design of training programs, because if it is realized that targets are not being achieved or sales quotas are not being achieved because of lack of knowledge, skills, expertise, talent amongst sales force, then such training programs need to be organized so that the salespersons can be equipped with the necessary knowledge, skills and abilities to be able to perform well in the field. So, that is how we say that sales quota also has implications for training needs and identification and design of training programs. Now, a little more to elaborate on the sales quota acting as a planning tool and acting as a control mechanism. Now, a sales quota is a plan and it is used as a tool to appraise the performance of the marketing units or of the sales units, be it a region or be it a branch or be it a salesperson, and it acts as a performance standard and can help ensure tight budgetary controls both in terms of the sales volume that is expected to be generated as well as the expenses that should be incurred. So, it acts as a measure against which performance of the salespersons and the territory can be assessed, and it helps assess whether the performance of a salesperson is satisfactory or not, whether the performance of the salespeople in a particular branch is satisfactory or not. Also, the selling expense quotas ensures that the net profits are not diluted, and as I just mentioned, because it's very important that a salesperson contributes towards profits in a healthy way, and this is measured only and only through the net profits, which shows that the kind of sales volume that is generated is in no way diluted because of the the selling expenses that the salesperson incurs. So, the selling expense quota ensures that net profits are not diluted, and the activity quota warrants that both selling and non-selling activities are undertaken and non-selling activities are in no way compromised or ignored, because as I just said, the non-selling activities are equally important, whether it is with respect to follow-up calls on customers or dealers or distributors, or whether it is with respect to generating goodwill, developing rapport, assessing market trends and gaining feedback, or it is report generation, etc. Now, the sales quota also has motivational implications. We just spoke about it a little while ago. Challenging and realistic quota motivates salespeople towards putting in effort towards their roles and responsibilities and help stimulate desired performance. Now, here we must actually keep in mind that the quotas are something which are very realistically set. They can be difficult, they can be challenging, but they should be attainable, and here is where we can relate this to the Room's expectancy theory, where we spoke about how effort leads to performance and performance leads to outcome, and the outcome is something which relates to the reward, which is highly attractive for the salesperson. We are speaking about Room's expectancy theory of motivation, where it is clearly it can be applied that the targets are something which are difficult, which are challenging, but realistic, so that the salesperson can well understand that his effort will lead to the desired performance and the performance will lead to the outcome. In case targets are too unrealistic and the salesperson feels that they are unattainable or they are unrealistic, in those cases the salesperson will not put in efforts, because he realizes that he would realize that effort would not lead to the performance and performance can never lead to the outcome. So that is how Room's expectancy theory of motivation becomes relevant here, where it's very important to understand that targets or something which should be very realistically set. They must be difficult, they must be challenging, but realistically set. Also, the reward or the incentive system in place is something which is attractive or perceived to be lucrative by the sales person. So, quotas are linked to the compensation plan, and salespersons earn incentives or commissions only after they meet the sales targets. In fact, in the straight commission plan, the performance of the salesperson is measured by the extent to which he achieves his target, and this is the only measure which determines his salary. So, the sales quota does have motivational implications, whether it is with respect to setting the right kind of quotas, or it is with respect to setting or deciding on the right kind of incentives to be provided to the salesperson. Most companies use a combination of both the fixed and the flexible elements, and incentives are linked to quotas, which act as a strong motivational tool. Of course, in cases where salespersons earn incentives or commissions only after they meet the sales targets, so there what we it is only and only their performance which determines whether they would get their salary or not. So but in other cases, most companies use a combination of the fixed and the flexible components, and the incentives are linked to the quota, which act as strong motivational tools. In fact, the incentives comprise the flexible element, and they are only and only earned when salespersons exceed their quotas or are able to generate healthy sales for the organization. So, but again, sales managers must understand that targets need to be realistic, and they also must ensure that whatever reward system is in place, whatever incentives are in place are actually attractive to the sales force and to the sales personnel. Sales quotas are often used in sales contests, and salespeople who achieve their quotas within the time frame are regarded as high performers. They receive a lot of appreciation, recognition, and they are rewarded with both monetary and non-monetary incentives. Now, here again we can link this to Herzberg's theory of motivation, where even achievement or recognition or challenging work and attainment of goals can act as motivators. And so it's very, very essential that the sales managers at the branch or sales executives, senior executives at the region and at the corporate set such targets which will motivate people towards putting in hard work, towards putting in a lot of effort to achieve the goals. And they must also ensure that the reward system is something which is lucrative. This could be both monetary as well as non-monetary, and monetary in the form of commissions, incentives, and non-monetary in the form of awards, accolades, certificates, paid holidays, trips, overall company and corporate recognition through medals, certificates, etc., which can be highly attractive to sales force to be able to be on their toes to achieve their organizational goals. Now, what are the objectives of setting quotas? So, the core objective behind determining sales quotas or targets is to achieve a desired level of sales performance, and this performance could be at a micro level, which is the individual level, or it could be at the branch level or regional level, or at the national level, which would be more of a macro level. So, the major objective behind setting sales targets or quotas is to achieve a desired level of sales performance, either at the micro level, which is the individual sales force level, or it could be at the branch or the region or the national level, which is more of a macro level. Now, quotas serve as means of communicating a desired level of performance which is expected from the sales manager and his team in a branch over a period of time, and from salespeople who are employed in their respective territories. It helps assess individual salesperson's performance and helps identify salespeople who are good, who are average or below average performers, and who are star performers. And similarly, they also help assess the performance of the different branches in a region, of the different regions and zones in the country and at the national level. So, sales quotas help assess performance at micro level as well as at macro levels. A micro level being the sales people, the salesperson himself, and then assessing performance at the branch, at the region, at the zonal and at the national level, which is more of the macro level. So, such targets motivate salespeople to achieve a desired level of performance, and then these are linked with incentives. They act as very strong motivators. But again, as I just mentioned, these incentives would act as motivators only if quotas are objectively determined, very systematically set and clearly communicated across the branch and the region, and the incentives are something which are highly attractive for the sales person. Now, quotas also play a very important role in facilitating sales control through delineating targets for sales volume, selling expenses, profits, and selling and non-selling activities. Now, territorial performance, which is measured in terms of the actual performance vis-a-vis the desired, help measure performance of salespeople in a territory and help identify the scope of improvement so that corrective action plans can be undertaken. And sales targets also actually help ensure that salesperson's efforts are effective and efficient, as some organizations allow reimbursement of selling expenses only and only when a certain level of sales volume is earned by the respective salesperson. So, some companies have a policy where they allow reimbursement of selling expenses only and only if a certain level of sales volume is achieved by the salesperson. So, sales targets also serve as a means for ensuring that the salesperson's efforts move towards a fruitful end, and their efforts are effective and efficient. And this is actually done to ensure healthy sales to expense ratio. This also ensures that salespeople are always mindful of the fact that they do not just have to generate sales, but they have to generate profitable sales. So, it is very, very important that they keep this in mind, that while earning sales is important, while earning sales volume is important, it is also important that expenses are controlled so that overall contribution of a salesperson is positive for the organization, and it leads to net profits for the organization. So, salesperson must understand that it is not only sales that needs to be generated, but it is what is more important is generating profitable sales. Now, let us now come to the different types of sales quotas. Now, sales quotas here can be sales volume quotas, which are rupee or dollar sales volume quotas, unit sales volume quotas, or point sales volume quotas. And then we have financial quotas or the sales budget quotas, which talk about the gross margin or the net profits. So, we have the gross margin or the net profit quotas, and we have the expense of marketing units. And then we have the activity quota or the sales activity quotas, and then we have combination quotas, or it is a point system quota. So, what is the sales volume quota? Now, the sales volume quota, this is one of the oldest and the most commonly commonly used form of targets, extensively used by companies to evaluate the performance of their sales force at individual level or at branch or at regional and national level. And here the sales quota may be stated in the form of currency, which is rupee or dollars. It may also be stated in the form of units and points. Now, sales volume targets are set, they are communicated across to the salespersons in a branch and in a territory, thus making them aware as to how much they must sell in rupees or in units within a time frame. So, here the sales volume quota could be either set in the form of a currency unit, which is a rupee or a unit or a dollar, or it could be also set in terms of units which the salesperson must sell. Now, sales volume targets are indicative of the desired level of profitability that an organization expects to earn, and for of effective control, the sales volume quota must be set for the smallest marketing and sales unit, be it the salesperson or be it a branch, and be it product items and or brands or SKUs. Now, let us first talk about the rupee or dollar sales volume quota. Now, sales targets here are specified in the form of currency, be it rupees or be it dollars. Method is used by companies that sell wide product assortment, and they sell wide product lines, and where salespeople are required to sell several products. Now, the target here is specified in terms of currency, so that the complexity of specifying targets for individual products can be avoided. So, instead of setting targets for each of the products in terms of numbers, which could contribute differently and variedly in terms of money to the organization, companies prefer to actually use this quota, where the target is specified in terms of currency without taking into account the price differences across different products. So, in case there is an organization which sells wide products, and these products are very variedly priced, it would become difficult for an organization to keep tab as to which of these is being sold more, or which is contributing higher profits, and it would become difficult. It would also involve a lot of paperwork So to avoid such a kind of complexities, to avoid such kind of problems, salespeople are required to they are provided a target in terms of currency, so that they do not have to specify targets for individual products. So, those companies that sell wide product lines and where salespeople are required to sell different products, the rupee or the dollar sales volume quota is used, where the target is specified in terms of currency, so that the complexity or the problem of specifying targets for individual products can be avoided. Also, the selling expense to sales expressed in percentage or ratio can be easily calculated. The second type of quota is the unit sales volume quota. Now, sales targets here are specified in the form of product volumes. The method here is used by those companies which sell narrow product lines, and the salespeople are required to sell very few products. So, the method is also used where the prices of products are high, or where prices fluctuate over a period of time significantly. So, in this case what happens is a rise in price can easily result in attainment of a rupee or dollar sales volume quota. So, it would be a wrong indicator of the salesperson's performance. Like for example, the price of a product suddenly increases, and so a salesperson who sells a product suddenly shows a positive contribution in terms of the rupee or dollar sales volume that he has generated for the organization. Now, this may not be a true indicator of his performance, because the contribution to contribution in terms of rupee or dollar sales volume has not happened because of the performance of the salesperson, but it happened because of the price rise. So, to avoid this kind of problem, companies who sell products with narrow line of products and products which are expensive and where products fluctuate very rapidly over a period of time, they use the unit sales volume quota where targets are specified in the form of product volumes. The third is a point sales volume quota, where sales targets are specified in the form of points, and method is used by such organizations that sell wide product lines and want their salespeople to sell a balanced line and to sell products that have higher profit margins. For example, companies which sell products which are low priced or small ticket items, and high priced and big ticket items. Now, it is always easy to sell small ticket items, and so in order to make up the number in terms of unit sales, a salesperson may find an easy way out by selling more of the small ticket items which are easy to sell. Now, in this case what happens is that the big ticket items or the more profitable items would get ignored, and the competitor can take advantage of such a situation. Also, the company would find itself with a huge inventory of such products which are big ticket items, and with no takers, because the salespeople are not putting in those desired efforts to push those products. So, in such cases companies use the point sales volume quota, where they want the salespersons to sell a balanced line or to sell products which are both high priced and low priced, and so they come in with a point system where a big ticket item which contributes to profits of a company significantly, but is difficult to sell would if sold would mean more points compared to small ticket items. So, in this case a salesperson who sells one big ticket item may get say 5 points, and if he sells a small ticket item he gets just 1 or 2 points, and then these points get related to incentives later on. So, this is what is a point sales volume quota. Now, the next is financial quotas or sales budgets quotas. These are devised by companies in the form of gross margin or net profit quotas and expense quotas, and the objective here is to maintain a certain level of profit margins, whether it is gross or net, and the basic reason to have this quota is to control selling expenses. Now, the basic premise of the financial quota is to make the salesperson understand that merely selling volumes is not enough. What is more important is to make profitable sales. So, large number of units must be sold at right prices and with the least of selling expenses. So, hence expense quotas are generally stated as a percentage of sales. Now, we have the gross margin and the net profit quotas, where the gross margin is calculated by subtracting the cost of goods sold from the sales volume. And the problem here with this quota is that the sales manager or the sales team or the salesperson does not have a control on the cost of goods sold. So, they cannot be held responsible for the gross margin. On the other hand, the net profit is calculated by subtracting the selling expenses from the gross margin, and the direct selling expenses of the salespeople include expense on traveling, boarding, lodging, entertainment for customers, etc. And the problem here again with this quota is that some salespeople reduce these expenses on travel, and they also avoid non-selling activities because they incur an expense but are not linked to an incentive, and so this could have a negative impact on the sales of the company, because the salesperson may avoid traveling because that would mean an expense, and so he may lose out on calling on clients or customers or prospects, and so this can be a problem for the company. Expense quotas are used along with sales volume quotas, so that both are in line with each other, and salespeople give importance to both sales volume as well as selling expenses. And so, selling expense quotas are stated as a percentage of the sales volume. And then we have the activity quotas, which are used when salespeople are involved in both in several job related activities, and the objective here is to ensure that salespeople use their time effectively and efficiently for pursuing both selling and non-selling activities. Now, activity quotas are set up for with respect to calls per customer, calls on particular categories of customers, calls to be made to prospects, demonstrations, promotional activities, etc. And further, activity quotas are considered appropriate when it is felt that salespeople must be equally involved in selling as well as non-selling activities. Now, activity quotas involve a lot of record keeping, and salespeople must maintain proper records for both selling as well as non-selling activities, and in most cases activity quotas are again combined with sales volume and financial quotas. Coming to the last of them, which is the combination quota. So, as the name suggests, the combination quota here are set different in a different, wherein different quotas are used together. They are used by companies for controlling both selling and non-selling activities, and it is also used when companies want their sales force to sell a balanced line, and they want to assess the performance of the sales force in selling different kinds of products. So, weights are assigned for selling, for performing both non-selling and selling activities, and a point system is used as a measure. This is because different types of quotas would involve different measures. So, with this we come to an end of this lecture. The references are still Kandev, Govoni, Puri, Sales and Distribution Management 6th edition 2017, Pearson India, Panda and Sehdev, Sales and Distribution Management 2011 and 2012, Oxford University Press, and Havaldar and Kawale, Sales and Distribution Management 2017, McGraw-Hill. So, this brings us to an end of the second lecture on the 7th module of the course. I hope you found this lecture beneficial. Thank you.